Welcome to Matt's Financial and Geopolitical from the Frontier. Trust the week's gone well so far. It's been extraordinary. My piece over the weekend was 2016 starts with a bang, and it's continuing to bang, as it were, in the markets. Understandably, amidst this global markets are selling Chinese policymakers' ability to control their economy. I think that's an important fact. David Bowie, and really thinking of him, sort of my teenage years, I must admit, and then I was listening to the BBC, Nuala McGovern, and she found somebody who said her favourite song is this, David Bowie, Moonage, Daydream it's called. Please listen to it, and the words are amazing. I'm an alligator, I'm a mama papa coming for you, I'm the space invader. Keep your electric eye on me, babe. Put your ray gun to my head. Press your space face close to mine. Love. Don't fake it, baby. Lay the real thing on me. The church of man love is such a holy place to be. Make me, baby, make me know you really care. Put up a photograph of him. Another link to a song I liked called Fame. A couple of quotes. The truth is, of course, that there is no journey. We are arriving and departing all at the same time. Starman, if you haven't heard that before, there's a link there as well, and I'll put up a photograph of David Bowie and his wife Iman, who tweeted a photograph of herself a few days ago at age 63, and it was pretty unbelievable, frankly. North Korean leader Kim Jong-un salutes during a visit to the Ministry of the People's Armed Forces on the occasion of the New Year. This caught my attention in the body of an article. We'd rather die eaten by fish than eaten by worms. This is about crossing the Mediterranean. The Arab Spring began in hope, but ended in desolation. Arab Spring was always a misleading phrase, suggesting that what we were seeing was a peaceful transition from authoritarianism to democracy, similar to that from communism in Eastern Europe. The misnomer implied an oversimplified view of the political ingredients that produced the protests and uprisings of 2011, and over-optimistic expectations about their outcome. 5 years later, it is clear that the result of the uprisings has been calamitous, leading to wars or increased repression in all but one of the 6 countries where the Arab Spring principally took place. It was one of the paradoxes of the Arab Spring that rebels supposedly seeking to end dictatorship in Syria and Libya were supported by absolute monarchies from the Gulf. The West played a role in supporting uprisings against leaders they wanted to see displaced, such as Muammar Gaddafi and Assad, but they gave extraordinarily little thought to what would replace these regimes, and that's been the perennial problem. My conclusions are it's a debacle, it's fragile, and the breakup will take the refugee crisis 20x. Mohammed Javad Zarif wrote an opinion piece in the New York Times, Saudi Arabia's reckless extremism, it's called, saying the world will soon celebrate the implementation of a landmark agreement that resolves the unnecessary, albeit dangerous, crisis over Iran's nuclear program. All parties hoped and continue to believe that the resolution of the nuclear issue would enable us to focus on the serious challenge of extremism that is ravaging our region and the world, he said. Saudi Arabia seems to fear that the removal of the smokescreen of the nuclear issue will expose the real global threat, its active sponsorship of violent extremism. The barbarism is clear. At home, state executioners sever heads with swords, as in the recent execution of 47 prisoners in one day, including Sheikh Nimr al-Nimr, a respected religious scholar who devoted his life to promoting non-violence and civil rights. Abroad, masked men sever heads with knives, it says, saying the Saudi leadership must now make a choice. They can continue supporting extremists promoting sectarian hatred, or they can opt to play a constructive role in promoting regional stability. Conclusions, some of them came from an Asia Times article. Gulf monarchies are terrified by the strengthening Shia arc in the region. Although it is difficult to see how far Saudi Arabia would go in its deliberately manufactured confrontation with Iran, it does no longer seem to be possible for it to reverse the geopolitical trajectory of the Middle East to its sole advantage. In a way, it feels like Gulliver railing against those ties, isn't it? Then I take you to the piece I wrote in 2013 when I was talking about Barack Hussein Obama and Hassan Rouhani, and I said they're going to have to cut through a great deal of interference. In this situation, there are powerful vested interests fully invested in the status quo. If the Pax Americana in the Middle East were a three-legged stool with the US the most important leg, then Israel and Saudi Arabia are the other two legs of that stool. Neither Riyadh nor Tel Aviv are aligned with President Obama's Iranian rapprochement, and Saudi Arabia in particular has become increasingly forthright and is even threatening its own pivot away from the US. That was in 2013. We're now seeing that happen. Pakistan's Army Chief General Raheel Sharif, what a fine-looking fellow he looks cut out to be an army chief, has said the country will ensure a strong military response in case of threats to Saudi sovereignty. The Saudi Defense Minister, the Deputy Crown Prince Mohammed bin Salman, was visiting Pakistan. The photograph I'm about to put up was from Abu Dhabi in February 2015. And then I take you back to a German spy agency report which warned of Saudi intervention destabilizing the Arab world, but more than that, in my view, it's destabilizing Saudi Arabia, saying the careful diplomatic stance of older members of the Saudi royal branch has been replaced by an impulsive policy of intervention. Saudi Arabia was prepared to take unprecedented military, financial, and political risks to avoid falling behind in regional politics. Let's go to the currency markets. The euro has popped higher, 108.94. The dollar index around the 98.71 level. Japanese yen, 117.43. Swissy, 0.9993. The pound is at 145.30. The Aussie is at, and that's seen as a proxy for China, 0.6951. India rupee, 66.895. South Korean won well over 1200 now, 1210.76. Rial 405.44. Egyptian pound 783, and the rand last I checked 16.88, but it could be anywhere. Dollar yen, let me put up a 1 month chart. I'm very bullish about the yen. We are now at 117.43, and I think we can get as high as 105. And this is on a current account surplus, lower oil prices playing out in its favour. Euro dollar getting a little bit of a pop, but struggling to get hurdle 109, just below at 108.96. Dollar Canada, which I've been bearish forever, about 142.45. My target is 155 now. Wow, what's been going on in the commodity markets? You will remember in November 2014, I wrote a piece saying the commodity super cycle is dead in the water. It said policymakers need to react with speed. But history informs us that policymakers are typically very slow to react to trend changes. The commodity super cycle is now dead in its tracks. This is a major turning point and represents a major shift away from commodity producing countries and towards global consumers and consumer countries, I say again. I'll put up a chart of a Bloomberg index which tracks 22 materials drop to its lowest since 1999. Gold last trading at 10.95. It's been outperforming on geopolitical concerns. Crude oil continued a relentless dive early on Tuesday. It's now down nearly 20% since the beginning of the year. Oil market is bracing for a longer downturn as 2020, i.e. oil in 2020, falls to $50 a barrel. Holger put up an image so you can see it. 2020 crude falls to $50. Yesterday we had a 6% fall. Today we've continued to fall. Morgan Stanley's talking about $20 oil. I'll put up a 3-month chart of WTI and you can have a look. You will remember I've written about this several times. I'll take you back to October 2014 when I said the conditions, and I will explain them momentarily, are optimal for a complete washout. A blow-off bottom was a more earthy description in my time, down as far as $50 a barrel. I made a few comments in an FT video about China and Japan competing in Africa. This is about how Tokyo is taking on Beijing in Africa, claiming quality over speed. I was describing a road which is not too far from here, which was built by the Chinese, and that it was, the road itself was of infinitely higher standard than any other road found in Nairobi. Zanzibar opposition warns of violence if disputed vote is rerun. A revote is not a solution to the ongoing crisis and is not acceptable, since Zanzibar's second vice president, Hamad. This is Magufuli's biggest challenge right now. He needs to do a Houdini in the matter of Zanzibar. Let me put up a photograph of the Zanzibar sunset. Uganda's president urges voters to re-elect the old man. Says he needs more time to develop the country as he looks to enter a 4th decade in power, urging voters to re-elect the old man. As a younger man, he said leaders who overstayed in power were the root of Africa's problems. 30 years later, he is still in charge and hoping to win a 5th term in elections next month. Those who say let him go, they need to know that this is not the right time, Museveni said. This old man who has saved the country, how do you want him to go? How can I go out of a banana plantation I have planted that has started bearing fruits, he said. He was my guest at Mindspeak in 2011. The link is there on Rich Ratnam's. Do take a look. He's a pretty interesting character. And I'll put up a photograph of his hat at that Mindspeak session. Uganda intimidation of media civic groups. Now this is ahead of Uganda's, of course, holding presidential and parliamentary elections on February the 18th. Human Rights Watch have put out a report, Keep the People Uninformed, pre-election threats to free expression and association in Uganda. I think government intends to keep the people uninformed. You see, uninformed people are easy to manipulate. Do have a look at that. It's a pretty lengthy report. There is a lot of love between me and the president, said Ramaphosa during the SABC breakfast session, which included all top ANC officials on Monday. He was responding to a Mail and Guardian article where it was speculated that there was some distance between the president and his deputy. South Africa is moving closer to a recession and possible credit rating downgrade to junk after the rand collapsed as investors lose faith. Currency of Africa's second largest economy crashed to a record low of 17.9169 against the dollar early on Monday, as market turmoil in China and a drop in US stocks deterred risk-taking. It recovered some, but on all the stock market, the all shares down 4.68% year to date. The rand plunged as much as 9%, which is the biggest plunge since October 2008 to a record low. 1 month implied volatility surged 4.79 percentage points to 24.69. It's hard to see the rand pull back on a sustainable basis, Standard Bank put up a 3-month chart of dollar rand, and we're now in a bear market. And President Zuma, it's all about President Zuma. It's not about economic situation. But now you've got the risk of sharply high interest rates. You've got a real risk that this economy absolutely slows down because of these false moves that the president made. Citibank cancels loan facility to South African Airways. We are aware that Citi has cancelled a 250 million rand facility to SAA and are working closely with SAA on the issue to make sure there's sufficient liquidity. We are unable to comment further. Egyptian pound 783, Egyptian EGX 30 down 5.3% year to date. Nigeria, this is from the FT. Now the restrictions are biting the country's international jet set, who are, to their embarrassment and frustration, finding their debit cards rejected at ATMs, restaurants and shops from London to Dubai, and from Paris to New York. And then we've learned that the Nigerian central bank is cutting the flow of dollars to money changers, stops selling foreign exchange to money changers. Operators in this segment of the market would now need to source their foreign exchange from autonomous source. The Naira will be devastated by the ban, said Aminu Gwadabe, president of the Lagos-based Association of Bureau de Change Operators of Nigeria. The Naira is going to depreciate further. Toward the end of this week, we might see it reach 300 per dollar in the unofficial parallel market. The Nigerian all shares tumbled 8% this year. Ghana Stock Exchange is up 0.21% so far this year. Karaturi challenges the Ethiopian decision to cancel its farm project. I don't recognize this cancellation, he said. The termination amounts to expropriation, which the bilateral investment treaty says must be accompanied by market value compensation. The government made the painful decision to cancel the contract because of a lack of progress. Karaturi basically was conceded a huge amount of land. Direct flights between Kenya and the United States could begin as early as May. I said Nairobi US direct flights have been seen by many, including myself, as a silver bullet. US investors are being gung-ho about Kenya. Their visits and tourism-related activity means this highway in the sky has legs. And I was also referencing a pretty big diaspora of Kenyans in the US as well, whom I visited with KCB a few years back. Kenya shilling, Teflon, 102.35. Nairobi all shares fallen 1.71% over the last two sessions, but it's down 1.01% year to date, which isn't bad when you consider Nigeria, South Africa. NSE 20 down 2.74% year to date. This is a report in the Business Daily. Ultra Tech Cement is in the race to acquire controlling stake in Arm Cement, in which it could buy convertible preference shares of up to $125 million US. Of course, Arm put out an official announcement, but did not speak to who the investor was. As I said, the market was down for two consecutive sessions. Safaricom was the busiest counter yesterday, closed at 16.25. TPS Serena up 3%. Tourism off a low base, but beginning to bounce, and I don't think that's reflected in TPS's share price. Standard Chartered, which has been egregiously oversold for a while, rallied 1.96%. EABL was marked down yesterday, 3.125%. But if you want to follow the Nairobi Stock Exchange in real time, just register on rich.co.ke, get a password, and then during trading hours log on to Rich Live. Once again, thank you for stopping by.